Are you looking at how loans and various EMIs can help you reduce your taxable income? Then watch this video till the end. Hi there, Namaste. This is Akriti Agarwal Iyer and welcome to part 2 of this video on tax deductions. In part 1 of this video, I discussed about all the investments and insurances that help you reduce your taxable income. In today's video, I'm going to discuss about loans. Yes, let's take your tax planning to the next level. Apart from the 2,60,000 rupees deduction that we discussed in part 1, you can further reduce your taxable income if you are planning any of those loans or expenses that I'm going to discuss now. And obviously, I'm starting first with home loan. Buying a home is not only a dream for everyone, but it is that one thing that also reduces your taxable income by 5 lakh rupees. Yes, so let's understand how. When you take a home loan, the principal amount that you pay towards your home loan can be claimed as a tax deduction under Section 80C. So you don't have to make any separate investments that we discussed in part 1 of this video. The principal amount towards your EMIs can be claimed as a tax deduction under this section. So 1.5 lakhs is taken care of. Further, the interest that you pay towards your EMI up to 2 lakh rupees can be claimed as a tax deduction under Section 24. So basically, you can claim a total deduction of 3.5 lakh rupees per annum when you take a home loan. Further, you can also claim a deduction of additional 1.5 lakh rupees if you are taking an affordable house. Basically, the government recently introduced that if you are taking a home loan to buy a house which is under the value of 45 lakh rupees, you can claim an additional deduction of 1.5 lakh rupees towards the interest of the home loan. So overall, you can claim a total deduction of 5 lakh rupees per annum. So let's discuss a few points that you should keep a note of when you are taking a home loan. This will just help you plan your taxes in a better manner. Your deductions up to 1.5 lakhs is allowed only on the principal repayment of the home loan if the house is self-occupied or vacant. In case if you've given the house on rent, then the same is not available to you. The house should be registered in your name where you're claiming this tax reduction. It shouldn't be that the house is registered in your spouse's name and you're claiming a tax reduction. In fact, if you and your spouse, if you have a joint ownership for the house, both of you can claim a deduction of 5 lakh rupees or 3.5 lakhs, whichever is applicable. Interest on loan from family and friends can also be claimed as a deduction. You just need appropriate proofs to substantiate that you're actually paying interest for the same. The deduction is available for more than one property. That is, you can claim a deduction for your home loans on up to 2 properties. Honestly speaking, when we're taking a home loan, the interest on the home loan EMIs is way more than 2 lakh rupees per annum. And we are losing out on tax deductions. So the government came out with an amendment that any interest that you're paying on your home loan, which is over and above 2 lakh rupees, can be carried forward for 8 years. Yes. So if in year 1, I'm paying a total interest of 2.5 lakh rupees, 50,000 rupees can be carried forward for the next 8 years and I will get a deduction of 2 lakh rupees in year 1. Now in year 2, if you're paying a total interest on your home loan of 2,25,000 rupees, 2 lakhs can be claimed in this year and 25,000 will be carried forward for next 8 years. Now this goes on and you are in year 7. In year 7, if your total interest on your taxable income is only 1,25,000 rupees, you're short of 75,000 rupees, right? Your deductions is claimed at 2 lakh rupees. So you can bring forward your first year of 50,000 rupees which you carried forward and claim that in the 7th year, and 25,000 rupees from the 2nd year can also be carried forward and claimed as a tax deduction in the 7th year. If anything up to 25k which is left from your 2nd year can be carried forward to the next 2 years. So basically in year 7 also you can claim a total tax reductions of 2 lakh rupees. This is how this carried forward of interest helps you reduce your tax liabilities. Now, after understanding about home loan and how it helps you reduce your taxable income, the next loan that helps you is your education loan. Any interest that you pay towards your loan EMIs is tax deductible to you. So education loan is a great way to reduce your taxable income because there is no cap for it. Apart from that, very recently government announced an incentive for electric vehicles. So if you are taking a loan to buy electric vehicles, a deduction of 1.5 lakh rupees for the interest on that loan is available to you. But do note that this vehicle has to be bought from 1st April 2019 till 31st March 2023. So if you're planning to buy your next car, you can go for an electric vehicle because that will reduce your taxable income by 1.5 lakh rupees. So these are some of the loans that really helps you reduce your tax liabilities. After this, the next thing that actually helps you are donations. When you're earning so much, it's always good to give some and also enjoy tax benefits along the way. So basically, the government allows you tax deductions for any donations you make. Just ensure that these donations are made from your bank. Cash donations only up to 2,000 rupees are allowed. And these donations have to be made to the notified institute as per the income tax laws. For your donations, there are certain limits set in the Income Tax Act. So there are donations up to 100% allowed without any limit when the donation is made to PM National Relief Fund or CM Relief Fund. Then deduction up to 50% of the donation amount is allowed to you when the same is made to Jawaharlal Nehru Memorial Fund or Rajiv Gandhi Foundation. Then there is a certain sublimit which is 10% of your gross total income. So donations up to 100% or 10% of your gross total income is allowed when they are made to certain institutes which are specified in the Income Tax Act, or donations or deductions up to 50% of the donation amount or 10% of the gross total income is allowed when they are made to additional institutes. So the government allows your deduction for the donations amount that you make, but it's important to note that there are certain limits and sublimits which are specified in the Act. So you should check that before with the institute to whom you are making the donations to get a clarity on it and be aware of the deduction that you will get. So let's see how your deductions pan out because of your home loan. So you get a deduction of up to 5 lakh rupees on your home loan. There is no limit on your education loan, 1.5 lakhs for your electric vehicle loan, and no limit for your donations. It is important to understand that when it comes to taxable income and deductions, it is very individual specific because it's based on your total income and how much deductions you can afford based on how much money you can spend or invest. But this definitely gives you an idea as to the options that are available to you. In our following videos, I will also discuss about new tax regime, old tax regime, and the investment proofs that you have to submit to your employer. We hope that this two-part video series have given you an insight on all the deductions that are available to you and you can start planning for the same right now. Yes, don't look at your tax deductions in the month of March where it's very difficult to invest so much money altogether, but start planning for them right away so that you can invest smaller portions of money throughout the year and plan for your taxes appropriately. So do let us know in the comments below what more you want to learn from us, and we will keep coming to you every Wednesday and Saturday with freshly brewed content. So do go ahead, share our videos, tell your friends and family members how they can reduce their taxable income. And please do note that it's always advisable to consult a tax expert on your individual case basis to know your tax liability better. Until then, don't forget to like, share and subscribe to our channel. And I will see you next week. Save hard and invest smart.